All right, so before kicking off our discussion today, I want to take a moment to remind our viewers and listeners about the 2024 TRS Summit taking place November 4th through 8th in Dallas, Texas. This is a 5-day face-to-face live class that will fast-track attendees into earning their TRS designation. The instruction will be delivered by the TRS fellows deep steeped in experience and from various roles within commercial trucking industry. So this is truly a one-of-a-kind opportunity, and we have limited seats available, so don't miss out. To register, visit our site at mcief.org. Have you gentlemen heard of this? Mike, Bert,
I
John?
have, and I actually have a couple colleagues that will be attending it to go ahead and knock out that TRS designation. They're excited to be able to be there in person, as well as be able to do it in a week.
All right.
Yes, I
Well,
saw the email come through, and same. I'm still looking for a role for an account executive, and as soon as I get the right person, they'll be sent to the program as well.
Awesome, John. Thank you.
Mm-hmm.
Thank you. And Bert, we've been working with your group, so we've been working with Assured Partners, and we're excited to I think nearly 50 of the Assured Partners team is taking their TRS designation with us now. So we're excited to have them on board, and we'll be taking them obviously through their designation. We intend to have them wrapped up by the spring, and they'll be included in our graduation at the annual conference. So all good stuff. All good stuff. All right.
No doubt.
We are back today to continue our discussion about the paradigm shift or the paradox actually that we're seeing in the financing world of insurance, and just kind of what's happening in the economy and how we can in fact increase the value of the insurers right now in a market that's kind of struggling or hovering, as we were talking earlier. So we've titled today's session The Collaboration Effect. And what I really want to get into today is trust, integrity, again, that value of the insurer to the insured, and what it takes now to move the motor carriers into a more desirable frame, a more desirable picture to get them insured, given the challenges that we're facing today. So let's talk about what's out there today from a couple of different perspectives. What I'd like to do, Bert, if I can, just kind of kick it off with you. Give us, if you can, kind of your perspective on what's happening out there right now. What are you seeing? What's the pulse on the market right now?
Thanks, Jim. Yeah, it's definitely changed. It is much tighter than it was, 2-3 years ago. From an underwriting perspective, we're seeing very little tolerance for poor safety scores and claims frequency, severity, drivers with issues on their MVRs. Very little tolerance. So it's more and more difficult to get quotes for carriers that are not super clean.
Mm-hmm. And Mike, a ripple effect in your world?
Yeah, I think as a wholesaler, we're starting to see this with our carrier partners as well. It's the profitability. We've seen it become a more challenging situation for most of our carriers, with the underwriting profitability results struggling. That on top of really just the situation with litigation, it's continuing to make it more difficult for our carriers to be profitable.
Jonathan, how about in your world? What are you seeing right now?
I have to do a lot more with preparing the client. And that entails going through their employee handbook, their safety manual. Yesterday, I'll just give a quick story. Yesterday, I was out with a client, 96 inspect score, with unsafe driving, and driver fitness leading the pack. So what the conversation was in order to get the markets to even entertain this, we're going to need to tell a story. And fortunately for you guys, this is a controllable area. If it was hours of service or vehicle maintenance, you're either running poor equipment, and it's very hard to change that equipment to fix your CSA scores. So, and then hours of service. When you see a company with high hours of service, typically they choose routes that they can't get to in time, so the drivers are always behind, and that's very hard to change your whole business model in order to obtain. So having only the unsafe driving and the driver fitness being affecting the scores is controllable. So the first thing we talk about is unsafe driving. Why is there 4 speedings? What's your policy? and getting them to buy into that belief. Because if we don't approach the carriers with a mitigation technique and a risk strategy, then you are going to get declinations in the marketplace, and we're going to be left with the hard to place carriers that are very expensive. So totally seeing what everybody's saying. Coaching from the broker side is at the utmost important right now, and I believe the carrier owners are listening.
So you just opened the door to a tremendous amount of information there, Jonathan, and I really appreciate it. Let's talk about the strategies that are being implemented. I mean, you covered a number of things, but we're in a scenario where you have a plan that's approached or proposed by an agent like yourself, that says, hey, here's how we can get you there. Here's how we can improve, your insurability. How are you making sure that, in fact, what is being proposed is being implemented, and that you're getting the effect that you want to get? And I'll throw it out to any of you.
I'll just continue with that, because it's exactly right. Like, I can always set them up and strategize, right? But the implementation has to be done by the client. Reinvesting in their company, hiring a fleet safety manager when you're above 25 units is a must. And they have, many carriers are trying to wear multiple hats with, say, the accountant or the dispatch team, and it just doesn't work. So on a quarterly basis, to answer your question, Jim, on a quarterly basis, we want to be looking at that 0 to 6 month space. What happened in the red? And then given the insured the guidance to either put them on a safety platform, like watching a JJ Keller video for strike 1, strike 2, maybe a suspension or time off of work, and then strike 3, you got to terminate. So it's really just following up with the tools that you gave them and making sure that they're implementing them. And if not, we're going to be in the same position next year. And that's kind of what I drive home to my clients.
Yeah, and I think what you bring up, Jonathan, is a key thing, is actually implementation. Because from the underwriting perspective, when we see a submission that has challenges, and we might be told, hey, they're doing this, they're doing that. And one of the challenges we have to do when we're talking to the carriers is actually showing that they're following through on this. Because if it's just lip service, you as an agent, your credibility is on the line, that, hey, next year when we see this account again, you told us that they were doing all these things, but nothing's improved. Are they actually doing the things you said they were going to do? So your job as a retailer really needs to be making sure that you're insured, your client follows through on these things. If they're not, then they shouldn't expect a change in their exposure or their premium, because loss results are going to continue to trend the wrong direction. And I'd say so often as an underwriter, we're seeing these accounts year after year. And if we're seeing the same story year after year and not seeing the results change, I think that's where you'll see carriers that are going to lose patience and tolerance for that type of communication. They're just going to move on, because they obviously aren't serious, or are only just telling you the things they think you want to hear to get the terms they want.
Absolutely correct.
So let's talk about that, Mike. Let's talk about how people present to you, and how they can convey the message that they in fact are seeing the turn in the direction that you want to see. What are some of the best approaches that you've used? Obviously, not you, Mike, but people who are submitting to you. What are some of the approaches that they've used with you that work effectively? Bert, Jonathan, what are some strategies that you used to make sure that the message is conveyed and you're getting the results, or you're getting, you're making the progress with the underwriters that you want to make?
Yeah. So again, the client, I'm not using a template, right? A general fleet safety handbook. The client needs to create their own MVR guidelines, their own philosophy on fleet safety management. Then you're taking that so you can hold them accountable for it. If you're just giving them a template and saying this is what the insurance carrier wants to see, they're just going to put that on the paper, and that actually hurts them rather than helps them, because now you have a plaintiff problem by attacking that motor carrier for things that they said they were going to do that they're not going to do. So to go back to your question on how do we follow up and advise the client, I would say one key factor is how to develop a safety incentive plan. And that safety incentive plan, most of the owners, especially the old school, hard-nosed trucking companies, are going to say, I pay them to drive professionally. That should be enough. And unfortunately, it's not enough. So developing a safety incentive program doesn't necessarily always even mean money. You can do gamification, where you gamify the scores each month based on your ELD data. You can do you can do a letter to their spouse where it just says, I just want you to know this driver's been excellent for us. What a guy, whatever, stuff like that. A plaque, just acknowledging their safe performance in front of their peers would be enough. So it's developing a plan and strategy that you can stick to. And every client's going to have a different tolerance for that.
Bert, anything you're using that you find as a strategy is effective?
I think constantly discussing this with them is important. Quarterly reviews is important. Looking at the accounts, looking at the safety scores. One thing that I think a lot of folks know, maybe they don't know, but it doesn't take much time to wreck your scores. You can tear them up in a short little bit, and it takes sometimes 6 months, a year, 2 years for them to improve because the scores stay on there forever. So it's a quick slide down and a long hike back up. So we try to coach guys before they have issues because once you have issues, a lot of the time it's too late. There's not a whole lot you can do quickly to improve. So
again, just to agree with Bert on this one, the other part of it is the fact of the number of inspections and what safety group you're in. I feel like a lot of these local carriers are running 100,000 miles, but they're not leaving the state, so they're not being inspected. And those 3 or 4 trips that they go out of the state, it turns into a quick inspection, a quick violation. And now because they haven't been inspected, the algorithm's off and they put them right into a score of a high risk, which sometimes isn't appropriate, but we can't challenge the DOT on that.
So Mike, circling back to you, what is it that you find is the most effective way to convey the success that's being made or to convey the change that's happened with a carrier? So it's right out in the open. There are no questions. What are you finding works effectively?
I think just proof is in the pudding sometimes. It's actually where you've seen the results, you've seen someone make the necessary changes. That's why I think you so many times see carriers that are reluctant to take on risk that said, hey, we just put in a safety program. I think you're going to find that carrier underwriters are going to say, well, we want to see how that safety program performs over the course of a year, not just, hey, you got the technology, you installed cameras, you've installed this or that. It's a lot of these carriers are going to want to actually see that they've implemented these things, and the proof is in the pudding. Like I said, that's where you actually see that's been effective and actually showing that they actually mean business. They are willing to adapt and evolve and better their business. That's been the most effective. You can't argue against it.
Mike, I will also say the carriers that are, your premier carriers are also going to offer a risk control person. So they can physically be in the office to see the results of the performance. And you can lean on that as an underwriter or as a broker like myself to have the risk control go out there to actually prove that what we said on that paperwork and why you bounded that account is actually happening. So you're right, but there's other ways to show it, which is risk consultant with the right carrier partners as well.
Well, I think the loss control is a big factor in that, is because on paper, when we're looking at these accounts together, from the retailer to the wholesaler, the retail to carrier or wholesaler, all of it's on paper or all of it's online, right? And so getting loss control involved is such a big difference maker because you actually get people on the ground there to actually assess and understand, either run for the hills because this safety director does not know what they're doing. It's just his buddy from, high school that he decided to hire to help him out. Or does this one individual have a background that understands it? They've done this for other organizations. They have a really good, strong resume that they've helped other trucking companies. So Jonathan, I agree completely that is a big way to make a difference on, it's not always clear on paper, but getting loss control involved, it can work against you though at times, but hopefully if you're bringing them out there, that this is going to be a benefit to everybody involved.
And I never feel it ever works against me because if they're willing to hide something that they told you from risk control standpoint, there's going to be much more issues with that account that it doesn't become profitable in the long term.
Well, you're probably not going to want to send loss control out there if it's not going to be a good situation.
Right.
So talk to me, Bert, you said in the beginning, it's tough right now. It's a tough market out there. What's the impact for those who are insured? They have an incident. They're now coming back. what are they looking at right now? What is a motor carrier, whether they're an independent contractor, a fleet, whatever the situation may be, what are they looking at right now as an increase, just based on where the market is? Are we talking, 10%, 12%? What's it looking like for them?
Yeah, I'd say for guys that are performing well, you're probably seeing a 10 to 15% increase. Guys that are not performing well, 30, 50% increase is easy, and in some cases 100%. I've seen guys that are really struggling 100 plus. I mean, I've had a lot of clients that are closed the doors because they couldn't afford to pay the renewal price.
I
they
agree.
just shut down. So
I had the
it's
same situation, Bert.
pretty wild.
It is wild. Exactly what you just said. I had a 400% increase on a 50 unit hauler in New York, and they tried it for a month and they didn't make it, and it's just very unfortunate. And it's like you said, when it gets really, really bad, it's impossible to run from those scores and those claims. And they some clients, it's their livelihood. They try other ways around it, but that DOT and that chameleon carrier is going to connect you. So
Something that I've started telling my clients recently, Jim, is that I'm coaching them and talking to them about safety scores and whatnot. And this is before they have issues. And I can't read their mind, but most of them are sitting there thinking, this is never going to happen to me. So I always tell them, hey, look, the last 5 guys I've talked to about this, they probably all thought this will never happen to them. And here we are, they're out of business. They can't afford insurance. So take this serious. It is serious. It's critical. And, I think when you say that, you're like, oh man, I was sitting here thinking, no, this is not going to happen to me. And it sure enough can. So.
Yeah, so when we opened this up, we were talking about relationships. So if you can, as we wrap this up, talk to the audience about the role of relationships and how you see that playing out right now, and how you think, quite frankly, the value of the insurer can be increased with the motor carriers.
Well, I'll go ahead and start it off. I think it goes back to my comment before. If we've got a risk that has some challenges with it, if Bert or Jonathan comes to me and tells me, Mike, look, here's what it is, lay out the facts, here's what it looks like, but here's what we're doing, here's what we've implemented, here's what you can see is already trending this way. That relationship helps me understand, because I've got a good relationship with Bert and Jonathan, that, all right, if they're telling me this, they've got a good track record to say that if they're doing it, it's actually going to happen. If you don't have that relationship, I might struggle to really trust that this insured has implemented these changes to be a better risk and more insurable risk. And I might not want to put my name and reputation on the line with my carrier partners. So that relationship makes a big difference.
Yeah, it's all the technology out there, Jim, it's a relationship business at the end of the day. And our office tries to operate with 100% integrity and do the right thing and have complete submissions that are accurate. And that goes a long way, because Mike can say, oh, man, I've been working with Bert for 15 years, and what he does, what he says, and when he tells me something, I can trust it. And that's huge, we plan to be around for the long haul, not just this submission, you know what I mean? So you got to be doing the right thing for everybody involved.
Jonathan, anything you'd add?
Yes, the relationship is very, very important. I'll tell you what. If you're a big shop, such as my shop at Hub, your carrier partners know that you have a lot of different options, right? So if they continuously see a submission that you're just trying to go out and block markets and you're sticking with one of your directs or a relationship, that is going to burn you in the long run. You're going to get another agent that comes in that actually takes a look at that market that you've been saying that you're going to. And so what I always do is work with relationships that they know when I tell them that they're getting the deal, if they get here and here, or there's competition, I'm feeling this way, they're going to make a decision positively for me and to continuously work hard on my accounts. So it does mean a lot.
Fantastic. Well, gentlemen, Mike Mitchell of RPS, Bert James, Assured Partners, Jonathan Maymoran of Hub International. Can't thank you enough for your insights, for what you've shared with us today, and for the time that you put into sharing these. And gentlemen, all 3 of you, for your dedication to MCIAF's curriculum committee and trying to lift, quite frankly, the education of all the insurers out there, regardless of what role they're in. So gentlemen, thank you very much for your time. hope to see you at the Western Conference. And if
We'll be
not,
there.
hey, we'll look for you at the TRS Summit. And if we don't see at any of those, we're going to come looking for you. So we'll catch up with you soon, guys. Again, thanks for
Always
your
a pleasure,
time.
guys. Thank you.
Thank
Thanks,
you.
Jim.
Take care.